Barry, you're a real estate investor, a hotel impresario. What are you doing buying a senior care company?
Hi, Eric. Nice to be here from you again. I can't see you, but I have an active family office, so we make lots of investments in lots of things. Technology companies, you know many of them, Pinterest and Palantir, and dozens of companies. So for me, I mean, I've always looking for opportunities. And in May, we raised this SPAC, and I said I'd do something that wasn't in real estate. I didn't want to compete with our funds in any way and the money we manage for our clients. So I also wanted to do something that I thought would act counter-cyclically to my real estate investments, something that would grow despite increases in real estate. I mean, interest rates or trade wars or global currency wars. So the healthcare sector seemed to be a really interesting place to focus. It's obviously growing, and the demographics are powerful. And then I learned about this company. But go ahead.
Cano Health is what it's called, and we should remind everybody of that. But here's one of the things I wonder. It's not like you don't have $60 billion of other assets to worry about, and Lord knows you don't need the money. So what was so appealing to you? Why raise a SPAC?
Because I thought it was an interesting time that we could find something interesting to do. I have a lot of connections. I know a lot of people, and I thought we'd be a good steward for a SPAC. We raised this kind of on the early side this year. At the time, it was the third largest SPAC ever raised in this cycle. And the bankers had been all over me to do this for like 10 years, but I thought the old structures were flawed. And I want to correct the introductory lady that said we didn't close the deal, we announced the deal and pending closing. But we looked at 50 or 100 companies, and we had a couple that were actionable for our SPAC. And this one I thought had the greatest upside. I was looking for something that I thought would be bigger in 5 years. Didn't really have a lot of technology to interrupt itself. These guys at Cano Health, led by this Dr. Marlo Hernandez, they provide primary care. They're the boots on the ground. There are 560 physicians. They have 70 odd clinics, and they're growing like 70% a year for the last 3 years. The #1 healthcare growth company in the country in 2019 and #6 last year. We're giving them roughly $1 billion between cash and debt pay down of capacity to grow even faster going forward. And what they do, Eric, was really exciting to me because they serve the underserved, and they provide 5-star care for people who can't get that kind of care. And I went to see their clinics, and I know because we've spent time together, you would appreciate this. It makes you want to cry. And these people are like family, and this company pays their doctors well. So this is like, I have my One Hotels, which is my green mission to teach people they can stay in a hotel and live a greener life, a luxurious life, and still be green. This company has a mission of taking care of the underserved all over the country and is growing rapidly into new geographies. And it's a mission-driven company, and so it has purpose, it has soul. Dr. Hernandez, who's a wunderkind, will kind of be the Elon Musk of healthcare. He thinks, he's having fun every day, and he still practices his clinical practices, but his team is engaged in really helping the country. And he's an amazing guy with an amazing personal story.
That is an inspiring message, and I would expect nothing less from you, by the way. And for somebody like Marlo Hernandez, right, for the sellers, I can see why a SPAC is attractive. It's an alternative to a private equity buyout. It's an alternative to a traditional IPO. But what about for the shareholders? And this is a serious question, not that my others weren't serious, but are the terms of a SPAC, a 20% promote right off the top, 2 rounds of banker fees, and pipe dilution really a good deal for the shareholders?
Well, let's take care of the last one first. The banker fees are pretty much equivalent to the IPO. And the PIPE, which is the private investment in public equity, which in this case was $800 million, and it was led by Fidelity, BlackRock, Maverick, and Third Point, all very knowledgeable and smart investors. That's very cheap to the company. So it dilutes the cost of the initial sponsor equity. And in my case, I'd say we're not just money. I mean, I was 35 when I started Starwood Hotels. Marlo's 35. I grew Starwood Hotels to be the largest hotel company in the world in 3 or 4 years. We had 120,000 people. I really was shocked that I bought ITT and bought Westin Hotels and did it all in the public market. So I intend to work with Marlo and mentor him on the pace of growth that I'm sure he's set his eyes on, his team has. And so I think they looked at us as not just money, just also not just a financial sponsor, but as a partner in their growth. I've launched 5 public companies. So
Will you do more of these, by the way?
In the public markets by now.
Will you do more SPACs?
A great book of shareholders for them, long-term thinkers. I think our core shareholders here are going to be along, as I will be along for the ride for quite a while as we watch Marlo and his team build, I hope, what will be the largest primary care provider in the country. They have
the largest primary care company in the country. That's quite an ambition.
Well, you set your goals how you might achieve them.